Good morning, everyone, and welcome to Finance Magnet Africa Summit 2026. I'm Ishani, and I'm going to be your host today in Traders Arena. We are excited to be here and bring together the people and ideas shaping the future of finance across the region. So, we are starting the day with a workshop focused on trading with structure, discipline, and clarity, giving traders practical tools to navigate the markets with confidence no matter the environment. Leading the workshop is Freno Deftelis, instructor at Tradepedia, who will share practical insights on approaching the markets with structure, discipline, and confidence. Please give Reno a warm welcome.
Thank you, thank you. Hello, everybody. Hello, traders. How are you guys doing today? You doing well? Good, good. Actually, I know it's in the beginning, so we don't have the most amount of people, but you can say you get personal attention, right? Okay, for those of you that don't know me, my name is Reno. I work for Tradepedia, analytical software instructor company in Dubai. I've been a professional trader for 17 years, and today our topic is actually all about trading with structure, because structure is the thing in trading that will give you confidence, and it is the thing that's going to protect you from yourself, especially when the markets get super, super volatile. So, can I just get a quick insight here? How many of you are traders? Do you trade full time? How have you been doing? How many of you are making money? Good, well done. How many of you are losing money? Oh, we got one in the back as well. And it is not uncommon, especially now that the markets are so volatile. And it all starts with a plan, okay? And this is what we're going to talk about today. And I mean, the basic concept of trading is to basically buy low and sell high, right? And I mean, it's a very simplistic thing. Even a child can understand it. I mean, all you have to do is buy low, sell high, you make money. But what do most traders do? You buy, the market tanks. You sell, and the market flies. Now, what is the problem? Why do most traders fail? Now, a lot of you will say, yeah, but it's fear and greed. You guys have any other suggestions? Why do traders fail? Overconfidence, don't have the right tools, I don't have the right knowledge, I don't have enough money. Yes? A lot of people with small accounts, they will say this quite often. I don't have enough money, and then some people say, yeah, well, my timing is just bad. Now, do you guys know what the biggest reason is why traders lose money? Anybody? No? Yeah, emotions is one of them. But they try to fight the market. Okay, how many of you guys have been trying to short the NASDAQ in the last couple of months? Because it makes sense, right? Wars going on, bonds are flying, they should come down. But you get great earnings, AI has got all the hype, and you keep on fighting the market, and it is the worst thing that you can do, and it is the biggest denominator when it comes to traders failing, is you think you are clever, more clever than the market. You try to pick the tops, you try to pick the bottoms. All you have to do is go with the market, go with the flow. So when it comes to trends, I mean, you can go and read any technical analysis book. They will talk about higher tops and higher bottoms, and the trend is your friend. But your probability is always better going with the people who are in control. Whether you like it or not, statistically, your probability is better. So you have three decisions as a trader, right? When to buy in an uptrend, yeah? Now, obviously, there are better times to buy. I mean, if the price has gone up too much, it's not a great time to buy. So you have to wait patiently for the market to come down before buying again. But most traders don't have the patience. You want to be in a trade every single minute, every single hour. Yeah? So we only buy in an uptrend. We only sell in a downtrend. And then when the market is moving sideways, which it actually does quite often, it's called the accumulation distribution phase, you do nothing, right? You take your wife out for dinner, it's way cheaper, trust me, than trying to mess around in this choppiness, yeah? So the whole point with structure, and we're going to talk about this a little bit later as well, is that when I start the trading day, I first of all look for the trends with the most clarity, the ones that have the strongest trends, the ones that are the clearest. Even if gold is my favorite instrument to trade, and it looks like this, I will not trade it. Even though I love trading it, I will leave it alone for other people. And I will trade the instruments that have the most clarity in the market right now. Okay, so technically it shouldn't be that hard, right? You either buy in an uptrend, you sell in a downtrend, and if the market's going sideways, you leave it alone. You go and look for something else. So the biggest thing when it comes to trading and it comes to structure and having a trading plan is money management. Because at the end of the day, you are working with your own money. You need to do anything to protect that money at all costs, right? But, you know, most people, you don't think about it that way. You think, oh, it's just a little bit of trading money. Let's see if we can flip the account today and tomorrow, and so we continue. And because you are taking so much risk, you are bound to blow the account, yeah? So you have to place a stop loss order for every trade. Now, a lot of you guys, how many of you do not use stop losses? Okay, yeah? Are you willing to blow the whole account? Okay, but if you're willing to blow the whole account, fine, don't use a stop loss. But if you're a normal trader and you're trying to protect your money, you need a hard stop loss, yeah? Secondly, a specific amount of money to be risked in each trade. Now, you guys have to remember, the less you risk in a trade, the more chances you give yourself to catch the good trade. If you're risking 25% on a trade, you're giving yourself 4 chances. I make 4 losing trades in a row easy, okay? So just think about it when you are applying risk. The less you risk, yes, the less you make, but you stay long enough in the game to catch the good one, yeah? Then the maximum amount to risk over a given period. So I've got limits on my account that I only have a certain amount of money in my account for the week. That way, that is the money that I put aside that I am willing to lose for the week. So if I blow the account within the week, let's say I get 20 trades wrong, I can still come back the next week, and I've lost a very small percentage of my total trading capital. Yeah? It's one of my biggest safety nets, is not putting all my money in my account. That way, if the crazy takes over, because it can happen and it will happen, that is how I protect myself. Clear? Okay. And then lastly, at the end of the day, it is up to you guys. Are you comfortable with risking X amount? Some people like shark cage diving. I don't, right? Everybody is different. Some people can handle risk better than others. And you will know if you risk too much on a trade because you will become nervous. You will look at your phone every 5 seconds, looking whether it's moved 2 or 5 pips up or down. Then you know you have traded too big. Clear? So find something that you are comfortable with, because if you get too stressed out, you're going to look like me in a couple of years. You'll lose all your hair, right? Except for you. You've already lost all your hair. But it's cool. You look good. Okay. Then, obviously, I'm not going to talk about expectancy because expectancy is just pretty much in very short terms. Expectancy is on average what you are expected to make per trade. Now, in trading, it's all about having big winners and small losers. If you have big winners, if you run the good trades, you can have multiple bad trades, and at the end of the week, you will make money because you cut the bad ones quickly, you run the good ones, okay? I'm not saying that you buy Bitcoin now and say, yes, it's going to go to $1 million. You also have to be realistic about it, okay? So, I mean, this trading system is only 30% correct, right? 3 out of 10 trades, this trader is right. 7 out of 10 is wrong. But if you look at the average win, it's $1,000. The average loss is 200. If you put this in the equation, you can see that this trader is on average to make a profit of what, like $160 per trade? So whenever you guys talk about accuracy, it's not the most important thing, right? Because you know what most beginner traders' accounts look like. They are super accurate because you have these small wins. Win, 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 win. And then you hang on for dear life on the losing trades. And then you start all over again. Win, 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 win. Big losing trade. And the slope is negative. The account will go to zero, right? And then we got the human mind, which is the third part of being a successful trader. And I mean, to be honest, I've got a degree in psychology. It has helped me this much in trading. Okay, I've counseled people. I don't care how long you've been trading, the crazy mind, which is the subconscious, which by the way is 10 times stronger than the rational mind, the conscious mind, it is very hard to control. At some point when the markets get volatile, the crazy takes over, and what do? You start moving your stop losses, you add to losing trades. So the whole point of having structure is to take control of this thing. This is the little mind in the back of your head that says, don't use a stop loss. Remember last time the market came down, hit your stop loss, went the other way. But you only remember that one time. The other 99 times, it stopped you from losing all your money. Yeah? So we need structure in order to protect ourselves from that guy. And you know what's a good tip? And I wasn't actually going to talk about it. If you had the willingness, or the crazy mind tells you to let's say short the NASDAQ at all-time highs, yeah? The trend is up, but you cannot help yourself. You need to short this thing. Do it, but do it with the least amount of risk that you can, yeah? That way you feed it, and it doesn't grow into this monster that at some point it's going to snap, and you're going to do all these crazy trades, revenge trades, and you're going to lose your money. Clear? So that is also something that I do. If I want to do something crazy, I risk absolutely nothing on it just to ease my crazy mind. Yeah? Okay. So obviously, there's no method that is 100%. Even if you know everything about technical analysis and fundamental analysis, it is not enough. You need the whole package, and you need structure in order to be profitable. You need money management, you need rules, you need to control your emotions. So when it comes to structure, basically what I do, and I sit every morning with my team. We are based everywhere. We are based in Lebanon, we are based in Europe, we are based in South America. We sit every morning, and the first thing that we do is we try to figure out what is the market sentiment for the day. What is the market feeling? Because depending on how the market is feeling, risk on or risk off, certain instruments will go up or it will go down. So it's giving us some idea of where to look for buying and where to look for selling. Yeah, I mean, if the Iran war escalates, I'm not going to be looking to buy stocks, the NASDAQ, those type of things. Yeah, I'm going to go for more safe havens, maybe bonds, maybe US dollar, oil, right? Oil has been a great indicator lately of the war. So you need to figure out, firstly, what does the market feel? And then what you do is you pick your standard time frame and your favorite instrument. The reason why I say you pick your time frame first is why? Because most traders, you already have a bias in your head because you read something on social media. Yeah? Guy told you, gold is going to fly. So you look at the charts for buying opportunities. And I can promise you now, you can always find a time frame that will justify your bias. Be it the 1 minute, be it the 5 minute. If your standard time frame is the 4 hour, you look at the 4 hour first. Yes? You see what is the trend. What should I be doing? Then you identify the current trend as well as the higher time frames. And the reason why so I use the 4 hour chart. The reason I look at the daily, the weekly, and the monthly is because that determines my risk assessment. If I'm going with the higher time frames, I risk more aggressive. Yeah? And if they are mixed, I risk a little bit less. If I'm going against the higher time frames, I don't risk as much. Okay? Because the higher time frames, it's the predominant trend. So I will still take the trade, but my risk assessment is based on the cycles that are sinking. Yeah? So that is one way that I determine how much I am risking on a trade. Second or thirdly, you wait objectively for the signal to arrive. I don't know what method you guys are using. It could be moving averages. It could be smart money concepts. It could be Elliott wave theory. I don't care. But you have to wait objectively. The whole thing about trading is that you cannot be biased. You cannot go on gut feeling because the market doesn't care how you feel. Yeah? You feel happy the one day, you feel sad the next day. The market doesn't care. You need to figure out what is the market feeling. Yes, and everything needs to be as objective as possible. Then, before you enter the trade, you know exactly what you are risking on the trade. You know, okay, I need to do proper position sizing. If I hit my stop loss, I'm going to lose the 1% or the 2% that I'm willing to risk on the trade. And I also know that if it goes in my favor, I'm going to make X amount and I'm happy with it. You take care of the fear and the greed that is going to make you do silly things, okay? You know the best case scenario, you know the worst case scenario. If you are happy with that, then all you do is you let the market do its thing. And the reason why I say this is because most traders, if the trade is going in your favor, you become the most pessimistic thing in the world. It goes in your favor, you're up like $10, $50, and the market has a little tick, you close the trade. If the market goes against you, you have all the hope in the world, right? You start praying, and you're like, somebody's going to help me, this thing is going to come back, and you hang on for dear life. It should be the opposite, yeah? So just to give you some sort of idea, this is what our morning structure looks like. So we post the chart with the signal. We've got the higher time frames on the table. We got the score of the quality of the trend. We've taken the sentiment into consideration. And then we say, okay, what type of setup is it? What is the quality of the trend? What type of risk are we taking? And this will be based on the higher time frame alignments. So the daily is not strong, the weekly is down. So I don't risk that much. I risk 0.5%. Now, yes, I'm working with a big account here, but still, everything is done very, very specifically in a very structural way. And this is what you guys need to do. Every trade needs to be assessed, and you need to You need to protect the whole portfolio, not just this one trade should not make or break you. Yeah? This is why you allocate, you go through this structure over and over again, and you apply it to every single trade that you do. So write it down, guys, because without structure, you are not going to survive the markets. You need, and the nice thing about having structure is once you grow older and you gain more experience, you can sharpen it, you can change it. Clear? But you need to establish some structure in your trading to protect yourself from yourself. So having structure allows discipline and confidence. It gives you objectivity, not gut feeling. You can measure your system. You can change the plan. You manage your risk, your entire portfolio to the market. And lastly, you keep your emotions intact, especially when the markets get quite violent. Okay, so do it today, even if you just do it on a whiteboard. Every single trade, before you start the day, you go through structure, you plan everything out, and then let the market do its thing. Okay, that breeds consistency, it breeds confidence. Okay. Well, guys, if you want to practice, go on to booth number 10 there with XM. We have I'm going to do her presentation as well. We actually have demo accounts where you can win up to 25,000 US dollars real money. So you can practice with paper money, virtual money, and you can test your skills against thousands of traders. So come and join us. But thank you very much and enjoy the next show, guys.